The global financial market is no longer a place. It's a process, a planetary-scale computation, executing over 1 billion trades a day in near-total silence. Trillions of dollars are moving not at the speed of human thought, but at the speed of light. And the decisions are no longer entirely ours. They are being made by a new kind of intelligence, one that learns, predicts, and acts in the microseconds between heartbeats. This is the world of the AI traders, the machines that now move the global economy. In the vast, climate-controlled data centers that house the world's stock exchanges, the roar of the trading floor has been replaced by the quiet hum of servers. Finance was once a fundamentally human endeavor, driven by research, intuition, and nerve. Today, the vast majority of all trades are executed by autonomous systems. We have constructed a global economic engine that operates beyond the limits of human perception. It is a system of interacting artificial intelligences, constantly competing and collaborating in a language of pure data. The critical question is no longer if machines can manage our markets, but what it means when they are the only ones fast enough to do so. To understand this shift, we must first look at the system's original bottleneck, the human mind. For generations, the work of a financial analyst was to find a signal in the noise, to synthesize company reports, economic charts, and global news into a single, actionable idea: buy or sell. The analyst's mind was the processor, but it was a biological one. It could only read so fast, remember so much, and connect so many dots. The first crack in this human-centric model appeared with electronic exchanges. As the physical trading floor became obsolete, orders became packets of data, and the market became a network. This set the stage for the first wave of automation: algorithmic trading. These early systems were not intelligent. They were obedient. They followed simple, pre-programmed rules. If a stock's price crosses its 200-day moving average, buy. If the price of oil rises 2%, sell airline stocks. These algorithms were faster and more disciplined than any human, but they were still just executing a human's strategy. They were tools, not traders. The true revolution began when the machines stopped just following the rules and started discovering their own. This is the leap from simple algorithms to artificial intelligence. Instead of being given a strategy, the AI is given a goal, such as maximizing profit and access to an ocean of data. Using machine learning, these systems sift through decades of market history, corporate filings, and economic reports. They hunt for complex, multidimensional patterns that no human analyst could ever hope to find. These are not simple if-then rules. They are subtle correlations across thousands of variables, statistical whispers that can predict a market's next move. Their senses extend far beyond financial data. Through natural language processing, AI traders ingest the entire global information flow in real time. They read every central bank statement, every regulatory filing, every influential social media post, and every corporate earnings call. Before a human has even finished a headline, the AI has quantified the article's likely impact on thousands of assets and placed its trades. The most advanced systems use a method called reinforcement learning. Here, an AI agent is unleashed inside a perfect simulation of the financial markets. It makes millions, then billions of trades. Every profitable trade is a reward. Every loss is a punishment. This is a process of accelerated artificial evolution. The AI isn't programmed with a strategy. It discovers it, developing tactics that are often effective, yet entirely alien to human intuition. This new form of intelligence doesn't live in the cloud. To win, it must live in the physical heart of the market. The ultimate currency in this world is time, measured in nanoseconds. High-frequency trading firms engage in a relentless arms race for speed. They don't just place their servers in the same city as the exchange. They pay millions to install them in racks right next to the exchange's own matching engine. This is co-location. The very length of the cable connecting their machine to the market's mainframe becomes a competitive advantage. When fiber optic cables proved too slow, these firms built their own networks of microwave and laser relays, transmitting data through the air because light travels faster through the atmosphere than through glass. Every microsecond saved is an opportunity to see the market and act before anyone else. Inside these firms, the halls are not filled with traders shouting orders, but with PhDs in physics and computer science quietly monitoring their models. The analyst's role has been fundamentally transformed. They no longer hunt for individual trades. They are now the architects and overseers of the AI systems that do. Their job is to design the models, curate the data they learn from, and most critically, manage the risk of a system they can never fully control. This new market structure, built for machine speed, is incredibly efficient, but its speed also makes it incredibly fragile. On May 6, 2010, that fragility was put on full display. In just a few minutes, the US stock market inexplicably plunged, erasing nearly $1 trillion in value, only to recover just as quickly. This was the flash crash. There was no external news, no human panic. Investigators later found it was triggered by a cascade of high-speed trading algorithms reacting to each other, a feedback loop that spiraled out of control at a speed no human could possibly intercept. It was a chilling glimpse of emergent, unpredictable behavior within our new, automated financial ecosystem. The event exposed the system's deepest vulnerability, the black box problem. Many of the most powerful AI models are so complex that their own creators cannot fully explain why they make a particular decision. The neural network's reasoning is buried in the mathematical weighting of millions of interconnected nodes. This opacity creates a terrifying challenge. When an AI contributes to a market failure, who is accountable? The programmer, the firm, or the algorithm itself? The stakes of this technological shift extend far beyond Wall Street, touching the fairness and stability of the entire global economy. The immense technological and data advantage held by quantitative funds creates a structural asymmetry. The market is no longer a level playing field, but one tilted heavily in favor of those with the fastest connections and the most sophisticated models. The AI's insatiable appetite for predictive data also pushes into ethically gray territory. Firms now use alternative data sources, such as satellite imagery to count cars in retail parking lots or credit card transaction data to predict sales. This raises profound questions about privacy and the weaponization of information in the pursuit of profit. And as more firms deploy similar AI techniques, any competitive edge, or alpha, rapidly decays. This forces a perpetual high-stakes arms race known as the Red Queen effect. Firms must run faster and faster, investing billions in new technology and data just to stay in the same place. We have reached a turning point. The vital task of capital allocation, deciding which companies and ideas receive funding, is being progressively delegated to non-human systems. The analyst, once a master of research and intuition, now serves as a final, fragile layer of human oversight for an intelligence that operates on a different plane of existence. Their challenge is no longer to outthink the market, but to build guardrails for a machine that thinks differently than we do. They are responsible for a system whose decision-making process is fundamentally opaque, whose speed is incomprehensible, and whose potential for cascading failure is ever-present. We built AI traders to pursue profit with superhuman efficiency. In doing so, we have created a new, autonomous force at the heart of our world. The ultimate question is not whether these machines are intelligent. It is whether we can trust a global economy managed by an intelligence that can calculate but cannot comprehend. If you enjoy deep dives into the technologies shaping our future, consider subscribing to HiTechnomy. This is HiTechnomy. Look beneath the surface of the future. Join us next time as we explore another technology, system, or breakthrough shaping our world. Powered by Algorithmic Labs.